A very good day to all my viewers for Trade Ideas. My name is Rain, founder of Forex 100 Academy Private Limited. So today for Trade Ideas itself, we will be looking at dollar Canada in a very interesting perspective. On top of that, I am doing it live, meaning to say that I'm walking through myself. I am also analyzing on the spot itself, and you will get to see how a full-time trader is doing their analysis and how they manage their trade plan. So if you love content like this, remember to click the subscribe button at the bottom. Alright, to subscribe to us only for just $100 for this month, and you get to receive not just Trade Ideas Educator, you get to receive the access for Trade Ideas Signal as well as Trade Ideas Daily. Alright, the final 2 days to lock in such an amazing deal, and of course I'll be sharing this to the public so everyone will get to see these 3 ideas for today, a way of saying thanks and ending off as a gift exchange to you. So in return, we hope to receive your comments at the bottom on the YouTube channel itself, and of course click it, watch it, share it with your friends. Alright, so let us go straight into dollar Canada. So over here at dollar Canada itself, it is a daily chart. Okay, so it start to have a setup that I personally pretty like it myself. If I would minimize it a bit, what is this formation, guys? I know this part it went a bit off, but to me it is still valid. Excuse me. So it is a potential or probable formation. Potential head and shoulder formation, or rather inverted head and shoulder formation. So I am looking at this on the daily chart itself, but as we all know, if we pull it off on the daily chart, our stop loss have to be pulled pretty deep into it, which I personally don't prefer to do so. So over here is the support level for the shoulder. Of course, this is not the right shoulder because it have not touches the neckline. Alright. Market has some consolidation at this portion, retraces back. Alright, retraces back. I'll see how the trade actually form up over here at this price. But my target profit I'm looking at is the extension of the movement over here, completing a AB equals CD movement. Alright, and for me to confirm this level as a level of support, I will need more evidence. I will need at least 3 pieces of evidence to make sure that that's the level I'm looking at. So I'm going to do something that none of my students have seen so far. I am doing a Fibonacci inversion technique. So once I inverted, what do I see? Accidentally shifted it, so please allow me. What do I see? Market came back to 1.2431, which is around 3 pips away from the level that I have plotted my support line over here based on the structure. Based on the candlestick, market came down, touch, retraces, came down, retest, went up, break below, close below, supported, violated, went up again, came down, supported, hold, the support hold again. So over here, that is my second evidence. First evidence, support. Second evidence of Fibonacci inversion technique. It end at 1618, and my Fibonacci retracement came into 1.2489 to this range itself. So let me just box this area up. As you can see, this is a potential area of support and resistance. So this is my potential zone for me to look for a buying signal. To some traders itself, you might have different views. You can say that because it has violated, that means it closed above and break above the supposedly neckline. I would say those are textbook cases. Not all the time that you see a perfect head and shoulder that touches here, came back at the same point and just rally off. So in trading, we have to be a bit flexible within our rules. And of course, you can say that Fibonacci will hit any levels and stuff like that, but I'm using a combination of Fibonacci inversion and a Fibonacci retracement to look at the level that it repeated at the same level plus minus 2 to 3 pips. Alright, so I box up this area for me to plan out my trade plan because I'm not trading off the daily. At least I am not looking for an entry price based on daily chart that will throw my stop loss more than 100 pips, and that's not what I want to see. So I go down to a 4 hours time frame, and this is what I see. Market has been moving downwards, breaking support. Sorry. If you look across other pairs, you'll see that dollar is depreciating. Alright, so at 1.2431 is the level I'm looking at for a opportunity to long the market based on the possible head and shoulder formation. Why would I still use the word possible? Because for it to be head and shoulder, it have to touch the neckline, came back, touch the right shoulder, and went back up, touch the neckline again. Then that is a proper head and shoulder formation. So I am getting in the market early, however, in a safe manner. So allow me to remove this level for the time being, so not to clutter my chart over here, and I might be using a different color. Alright, so market came down, went up, and came back down again. I realized this level, I'm just doing a shortcut. Okay, so this is the area I'm looking for a potential buying opportunity. So how do I know should I be getting 1.2493 as an engagement or 1.2431? It's around 60 pips apart. Alright, the truth about it is I don't know. Alright, for conservative trader, you can look at 1.2431, and of course the downside is you might be missing out the trade. The benefit is you have the least risk in terms of stop loss, because I'm going to plant my stop loss below this price, this blue box over here. Okay, for aggressive trader, you may look at 1.2493, but you will have additional 60 pips of risk compared to the trader that engaged at 1.2431. Advantage is you will not miss this trade compared to those who traded at 1.2431. You have better chance of getting your trade engaged. In fact, it's around just 36 pips or less than 40 pips before hitting your entry price. But that's not what I am going to do. What I'm going to do is in this blue zone over here, I'm awaiting for a double bottom. Alright, so this is the double bottom itself. Okay, if I crunch my chart a bit, why this zone? Because there is an area of consolidation. Let me just do this for you. It's clearer. Market actually consolidate at this region. Can you see that? If I zoom out to a higher time frame, you'll see that that is actually your previous left shoulder. If you treat this like a head and shoulder formation, over here is the top part of it as well. So what's going to happen for me? I am doing it a bit live for this trade, so I have to walk you through. Definitely I will be having a area that I'm looking to place in my to look out for a buying opportunity. Sorry, but the zone for me to engage is between 1.2431 to 1.2493. And of course, I will be sharing with you my preferred outcome and what I need to look for. Market first have to came down to 1.2431. Chances of it to come to 1.31, the retracement value highly likely will be at 1.2493. It may go into a slight consolidation at this zone, okay, because this is where the support and resistance, the candle is hovering around this region itself. I'm waiting for market to come back down to look for a opportunity to buy. Okay, I am using a RSI divergence, RSI 7 divergence. It have to cross below 21 over here at showing a over scenario, and on the second test, the second value has to be higher than 21, and that is a bullish divergence. I need to see that before I engage a trade. And of course, I do need to see a reversal candle that looks something like this. Go to the Art of Trading episode number 1. We did record a video sharing with you what's the minimum for confirmation before you engage a trade. So go watch that video. I don't want to drag this video anymore, any longer more. Alright, we are running like more than 10 minutes right now. So where do my initial stop loss goes to? Okay, I'm placing 25 pips below the low of this price. So let me just box out for you. That will be 1.2405. Okay. So this is my initial stop loss. Okay, I placed 25 pips below it. Alright, some traders you might want to use 61.8, but I keep to my own trading rules itself. And assuming that this is a double bottom, I need to make some assumption for me to drive a to produce a take profit level. I use a Fibonacci retracement tool from high to low, assuming that market came down to this price. Why I would like to share with you this technique, because this month is the month of giving, and we are pretty happy with what we are having this year. And in our company values is really to empower students the knowledge to trade the foreign exchange market independently and profitably. So we won't mind you learning the right technique, and of course I'm sharing you the thought process behind it. And of course our entry price could be here or here, so you have to drag it as it is. The last point might not be 1.2431, but personally I'll be looking at this level. This is the, we like to call it a TP0 for traders who are very, very conservative. You may choose to place in, okay, you place in your target 0 over here, meaning you say that once market came back up to this price, you shift your stop loss to entry price, but you may or may not choose to take profit. My target 1, personally, will go all the way to 38.2. Okay. Target 2 will go to 61.8. Okay, and final take profit level for traders who like to trade this like a head and shoulder. I'll be doing this. The completion of this, do a Fibonacci extension. Of course, if you don't understand how do I do this, and if you are interested to learn yourself, you can private message us. We do conduct courses, starting from teaching you how to identify chart structure, which that is the key of trading. Okay, and let me just minimize the chart a bit. Fibonacci retracement again from high to low. Okay, so once we did that, we will see that this is the area. Okay, 1414 and 61.8. This is the area that traders can consider to take profit over here. Yeah, this zone. Alright, personally I'll take 1.3275 as the final take profit level. Reason being, not the highest or the furthest, but I do see a strong support over here previously at this level. Okay, and of course some traders say that this level is not too bad, but I see a group of consolidation over here. It does meet the support on the earlier price, but personal preference, I would prefer this, and that's how I trade my head and shoulder. The head and shoulder, it should be a completion of A, B, C, D. Alright, so the reward is to risk ratio profile is phenomenon. Alright, if we do this, reward is to risk ratio profile is easily higher than like I don't know, it's more than 1:10. Yep, 1.3270 will be the final take profit for this trade. Okay, let us just take a look at this. Entry price over here, stop loss around 25 pips, 20 pips. Take profit 843 pips. It's crazy, isn't it? I do treat this trade seriously. I do believe that it will hit this level, but the important next level of reference or decision will be at 1.2915. Traders might want to consider that as your final take profit and look for more supporting factor for you to trade all the way up to 1.3275. But however, I do believe that conservatively, till 61.8 shouldn't be a problem. 38.2 is not too shabby as well. Okay, but I do need to see a double bottom, a divergence, and I'll trade this. Okay, because I know I can be wrong for 20 times. For this kind of reward is the risk ratio profile. Just one correct trade, I'll be profitable. And this is truly based on support and resistance, not a test of luck. Alright, so that's all I have for you today. And if you love video like this, click the subscribe button, and of course click the PayPal payment at the bottom to subscribe to us for just $100 for this month. Before 31st of December, you get to receive all three services, a huge saving. Usual price will be around $350 for all three services. And of course, you can click some other videos on our monthly review or quarterly review. You will see that trade ideas do produce a very good result, but I would like to stress that please do your own analysis and do not overtrade it. For all the trades I'm trading, I'm not risking more than 2% of my initial trading capital, and there are reasons behind it. Watch Out of Trading episode number 2. It will explain fully on that. It's a 25 minutes video. So sorry yesterday the sound quality is not as good as today. We are working to improve that. So other than the sound quality, Feel free to share your comments, insightful comments at the comment box below on the YouTube or Facebook, whichever medium you are looking at it. And I'll see you soon on the next video, probably tomorrow. I know it's a Saturday, but I will be producing some videos tomorrow as well. So that's all I have for you today. If I don't see you anytime sooner, I'd love to wish you a Happy New Year in 2018 and wishing all of you abundance and healthy. That's all I have for you. Till then, plan your trade and trade your plan. Thank you.